with a picture of Kobe in the background. It's amazing.
Yes,
What's up,
sir.
bro?
How are you doing?
Dude, doing awesome. I'm excited to get you on the team call today. You're one of our OGs. Sioux Falls represent. Guys, drop an emoji from the chat if you're from Sioux Falls. If you're a South Dakota boy. We've got that Midwest hustle in our blood. But I'm excited to get on this call today because you've been slinging some IULs pretty heavily,
hmm
consistently. First of all, how long have you been selling for, Kobe?
I say around 2.5 years, a little over that.
2.5 years. How long have you been selling IULs for?
I'd say like 2, 3 months.
Okay. 2, 3 months. How's it been going overall so far?
It's been going good. Obviously, just like with anything, there's like somewhat of a learning curve, right, in the beginning. But just kind of sticking with it, implementing the script, and falling into it, I've found some success as well as some of the guys that I've had follow the same script. So I think it's pretty plug and play for the most part.
Okay. Was it because you're primarily working mortgage beforehand? So when you switch from mortgage to IULs, was it a pretty easy transition, or did it take some time?
Yeah, so it definitely took a little bit of time. The transition really, I tried to implement it more into my mortgage script, like just kind of like expanding on how that kind of works, like how an IUL works with a client to begin with. And then once I kind of had a good understanding and they were, kind of into it and, going forth with an IUL, that's when I would, start to kind of like, dive into more of like the IUL leads. And I didn't start like right away with instant banking leads. Like it was just straight, like an IUL lead. And I'm not sure like really what it was targeting exactly. Um, but I do think that is a different kind of sale just because with a mortgage protection client, you're speaking to someone that is more, they're more, it's more like they need to get it done, right? Versus like
Hmm.
someone that's on like an IUL lead, they're more trying to get it like done because they have some sort of like ambition. So they're willing to put more towards it just because it's a little bit more selfish, so to say.
Mm,
If that kind of makes sense.
yes. And it's interesting because mortgage protection is much more emotional, more high intent, a little bit like, and you can apply a little bit more pressure to a mortgage lead, but when you're closing an IUL, it's more so simply presenting the information to see if it's a good fit and see if it makes sense.
Sure. Yeah.
Like
No,
if
100%.
somebody tells you in a mortgage appointment they need to think about it, that's much different than somebody telling you to think about it in an IUL presentation. Would you agree?
Oh yeah, because I feel like with some clients it is something that they do kind of want to think a little bit more on, which is definitely respectable. So it's always booking that follow up call and making sure that they're asking a ton of questions. I think you can usually tell who's really interested by like the amount of questions that they're asking if they're really interested, and that's how I know I got someone that's like really trying to like put forth towards it because they're asking me a ton of questions. And so
Yeah.
yeah.
And it's a really fun sale. Yeah, I sold IULs I went, hard for about 3 or 4 months selling IULs. And it's just, you're running them through the illustration, you're explaining how it works. And it's a lot less of a high pressure type of sale and more so just having fun with it. You can let your personality a bit more and just simply just seeing if it's a good fit. Anytime
Mm,
if somebody tells you they need to think about it in a mortgage protection appointment, I go straight for the jugular and I don't accept anything to think about it. But with an IUL, it's a lot different because if they tell me they need to think about it, like if they're on the fence, I don't close it and I don't want to close it because they're putting a lot more money into it and it is a lot more, a little bit more of a commitment because they're investing more financially. So just seeing if it does make sense because here's the thing, if you do push an IUL through and they're paying 800,000 bucks a month for it, then you're going to have a tougher time getting it pushed through because it also takes a lot longer to go through underwriting and get approved and everything else.
mm, no,
What
100%.
What carriers are you mainly writing for these IULs?
So right now it's Moo and Foresters. So I'm writing a ton of them, and then F and G. So F and G, and then I'm about to get NLG. So NLG's coming soon. Um, and I'm gonna be writing a lot of them as well. They have some really nice products, and so I don't know if everyone should try and get contracted with NLG if you can within like the Sure LC, and then also Fidelity FMG, just because they have probably one of the best IULs out there. Um,
100%.
yeah.
Yeah. So FNG and NOG, they got some clear IUL. So I'm assuming the IULE and the smart UL is for smaller cases, and if it's a larger case, you're going NLG FNG route.
Yeah, so FMG they take up to $1 million non I think it's non fully or it's not fully underwritten after age 60. So everybody under 60 can get up to $1 million. They might do some sort of like thing where they check on like the doctor, like see like, hey, what are you taking as far as prescription? But it's not going to be a full blood urine, none of that. So I've called a few of the carriers just to kind of see what their underwriting guidelines are as far as like when I submit an application. That way I'm not like going about like wasting a whole bunch of my time with an underwriting case because that can take a lot of time. And then also just I mean personally I'm finding like I'm probably gonna have to get a VA to take care of all that back end work for these big cases because I just want to keep selling. You know what I mean? And I
Yep.
think that once you start getting quite a few of these big cases, you're gonna want one. You know, it's just gonna save you time.
Yeah. Jake and get not either a VA or getting an admin, an assistant. Where Jake was just in my office an hour ago and he was talking to me. He's like, dude, it's like I have almost 30 grand in underwriting right now, which I don't have time to take care of all these funding requirements. Like he's putting an ad up for a staff member, and getting a staff member just looking for somebody part time just to take care of the pending requirements. Because it is a lot, especially with these IULs, and it certainly adds up.
But it's
So
worth it. I mean, if you can get, you know, just hire an admin and take care of that 2, 3 hours of back end work that needs to get done, and then you can keep closing deals like that's you know whatever the that deposit is for that IUL specifically, you just deposit it into your account without having to worry about any of that. So
oh yeah, you pay somebody $500 a week to take care of all your pending requirements. If that allows you to close one extra deal, you just paid for that staff member
right,
times four,
right.
times three or four. 100%. Where are you getting your IUL leads from?
Yeah, so right now I'm getting all my IULs from John, also known as like Empire Marketing. So like I mean if you're trying to get into those leads, I mean honestly I think that would probably be your best bet just because they're so affordable. Um, and I mean they're fire. I mean I'm really just running into clients ready to throw pretty much their damn credit card, everything at me. I'm like, whoa, all right, let's chill out. Let's take a look at the numbers. I want to make sure you can get approved first. Like, and it's really cool though to see that like people are really interested in you know the kind of product that's out there. And I think it's just because people are starting to take a lot more due diligence and educating themselves on how like what these policies are. Like everybody that I've talked to, they already have pretty good interest, like an idea of what they are. So they're taking some sort of like interest or like a certain level of educating themselves, and then putting that pretty much into the appointment with you know all the education I'm already giving them. That's just like stacking, it's just stacking on. And so I'm really just finding a lot of success with a lot of the people that are kind of like seeing the vision, especially once you get into the illustration, it sells itself. It's super simple.
100%. Jonathan, if you're on here, if you could drop your number in the chat, so anybody that's looking to get IUL leads, get a hold of Jonathan Avila. Great quality leads. Um, cool, bro. Well, I think what everybody on here wants to hear is, do you just want to role play and go through your IUL presentation? Call
Yeah,
me,
we can do
close me
that.
like I'm a client.
Sure.
Let's run it.
Gotcha. So ring ring.
Hello?
Hey Jonah.
Yeah.
Hey Jonah. This is Kobe. I handle the infinite banking insurance here in the state of Illinois. I was just getting back to you about the form you had filled out regarding the infinite banking insurance. I'm assuming you remember doing that.
Yeah, I'm working right now
So,
though. Is
okay,
this
yeah.
gonna
So
take
this
long?
was no, yeah. So this was the insurance where you can become your own bank using the vehicle of life insurance. It shouldn't take us too long. My job is just to educate you on how this works, show you all the companies, and see if you can get approved. Now, is this the first time you've looked into infinite banking insurance, or have you done this before?
No, this is my first time.
Okay. So, like I said, I'm a broker of the state. I work with all the companies here in the state of Illinois. So you've probably heard of like Mutual of Omaha, F&G, NOG. I have access to the entire market here in the U.S. Okay. Have you heard of any of those companies?
I have, yes.
Okay. So my job is just to help you find the best company and product out there based on your situation. Okay. So kind of just enlighten me a little bit, Jonah. What striked your interest when you were looking into the infinite banking?
Yeah, well, it seemed interesting because I'm buying real estate, and I heard I saw something about you could borrow against it, tax free, and not have to pay taxes on it. So the less taxes you have to pay, the better. So that seemed very interesting.
Okay. So yeah, you have some real estate and you want to borrow from it, and you like the aspect of it being tax free.
Yep.
Okay. Got it. Yeah, so you're pretty much right on. An infinite banking policy, Jonah, it's either a whole life policy where you receive dividends, or it's an index universal life policy, also known as an IUL. Okay. Now, your cash value is tied to an index fund. These index funds, they gain anywhere from 5 to 10% interest. Now, do you know the average interest accumulation on a bank savings in the US today?
About 4 or 5%.
Okay, so it's actually around 0.01%. So obviously, if you compare that to that 5 to 10% you're accumulating within these policies, right? It's literally a fraction of a percentage compared to what you're accumulating in the bank savings.
Mm-hmm. Got it.
Okay. And that's why they became so popular today, is because people are realizing you're not really accumulating anything in a savings account. Plus, it's not something that has a benefit if something happens to you. Okay.
Correct.
And so, are you kind of familiar with how index funds work, Jonah, or would this be kind of your first time looking into that?
First time looking into it.
Okay. So this is going to be how your money's working inside the policy. Okay. So the basic premise of index funds is that you participate in the market's gains, but you never participate in the market's losses. Okay. So these index funds, they have what's called a zero thresh floor. It's locking you in on the zero. So that means that only the market gains are what you're going to be participating in. So for instance, if the market goes up 15%, you might get 7, maybe 8% of that from the insurance carrier. Okay. But if it goes down 20% like it did last month, you don't lose anything. Does that
Okay,
make sense?
that makes sense.
Okay. So I'm gonna run through some health questions because this isn't something you can just go out and buy. You do have to medically qualify for it. Okay. Now, do you have any major health issues like a heart attack, stroke, cancer, asthma, COPD, anything like that?
Nope. Healthy.
Okay. You never had any like kidney, liver disease?
Nope. I'm huge.
Okay. Gotcha. Any felonies or DUIs?
Nope. Not that I've gotten caught for.
Okay. And then do you have life insurance, 401k, IRA, any stocks, bonds, anything like that?
Yeah, I've got a 401k.
Got a 401k? Do you have an idea what you got in there?
Probably got about 200 grand in there.
200 grand. Okay. Gotcha. Okay. And then do you have any healthcare, Medicare, any Medicaid, anything like that?
Nope.
Okay. And then on average, how much are you saving on a monthly basis that's not growing any interest?
We try to set aside a few $100s a month.
$100. Okay. Gotcha. And then when do you want to retire? Do you have an idea of when you're kind of planning on that?
Well, I'd like to retire by the age of 60, but the way my pension's going and everything else and the government, I don't know if that'll
Mm,
be doable.
okay. You said by 60, but you're not sure
Yep.
if that'll be doable. Now, Jonah, there's usually three ways we can go about setting these policies up. Okay. Now, depending on how we customize your policy, we can set it up based on your needs and budget. Now, look at it like this. With the policy, you're going to have two different hands, okay? On one hand, you're going to have the cash value. That's like the
Okay.
investment side, what's growing. And on the other side, you're going to have the insurance, okay? So that's what's going to pay out if something happens to you. Okay? If you get critically, chronically, terminally ill, heart attack, stroke, cancer, it's going to pay out for your loved ones, okay? Now, would you say you're more concerned on making sure your family has the most amount of coverage with some cash value? Or would you say you're mainly wanting this for the cash value, just growing your interest? Or would you say it's like a mix of both, cash value and insurance?
Mix of both.
Mix of both. Okay. Got it. Now, do you have like an idea of mind of how much insurance you're looking for?
$1 million would be a good amount.
$1 million. Okay. Gotcha. And then upon that point, I'm plugging them into F&G, or I'm automatically going right into the illustration part. So that's just plugging in everything that you're kind of like looking in for as far as like the amount of insurance, and then also kind of like explaining to you what it would look like for just putting in a couple $100 a month, right? Because if you're only trying to put in a couple $100, we can look at that. But at the same time, if you want something that's going to grow interest, I'm going to show you that as well. So I'm going to kind of range it in between that price of $1 million and then also how much you're trying to pay.
Claudia commented, Toby is more of a dog than Winnie. Sweet. And then are you sharing your screen on Crank Wheel with the clients going over the
Yeah.
illustration, or how are you doing that?
Yes. So pretty much, that's been somewhat of like a new process that I started. So it's all Crankville now. Before I would just send emails of three illustrations, just kind of like walking them through the three numbers. You can do that. I was closing deals that way. But I noticed like I can have more control over the appointment if I'm actually like showing them. And I also feel like it builds a little bit more trust because they're able to see your screen and like you're sharing that with them. So now I do both.
Yeah.
I send them over the email so they have all the illustrations, and then I also send them the print wheel. And it's super easy. All it is one text. The client clicks on the text, and then you can see where they're at looking at the screen. So if they're like not on the part that I'm like looking at or trying to show them, I'm like, nope, go over there. Like, you can go over there, and then that way I just know they're focused. You know what I mean? And they're looking at what they should be looking at.
How much better is using Crank Wheel versus just sending them the illustration via email?
I think it saved me some deals, honestly. Like at the end of the day, I feel like
For sure.
I've gotten to some appointments like the one yesterday that I closed for it was I think it was like the 1800 AP, but the guy he pretty much was kind of confused on like just like how the illustration was working, and I sent him after I sent it over to him, and so I hopped on Crankwheel and then I just like literally highlighted the parts that he should be looking at, and then everything was good, and he like had no question. He looked at everything, and you can see everything that they're looking at, so it's perfect. It's all you got to do is create a login, like a password and all that for Crankwheel, and then it's free. It's completely free.
Nice.
Everyone should. Yeah.
Do you want to create an illustration on me and walk us through what you go through with the client?
Yeah.
What's wrong? And guys, if you guys aren't using Crankwheel, it's going to help you tremendously. If you're running mortgage product, regardless of what you're running, if a client is ever skeptical or not wanting to give you their social, not wanting to give you their banking, just text them the Crankwheel link. Like what Kobe said, they don't have to download anything. They don't have to create an account. All they do is click the link, boom, instantly sharing your screen, and then you can like the client can see your exact screen. So they're thinking, hey, what's your social? Why do you need that? You boom, Crankwheel show them the screen, Mutual of Omaha. This is the insurance application. This is why I need this information. And then they're a lot more likely to give that to you and provide that.
100%. Like, yeah, I mean, I've heard some guys just like straight up showing like the full on application, like you just said, like going through all that with them. And like, yeah, you could do that too, I think.
Yeah, definitely going to save you some deals for sure. And then
then
Claudia, can you give Kobe the ability to share the screen since you're the host?
Yes. You should be able to share your screen.
well, I'll do it like this. I'll send it over to you, Jonah. So I just sent it to your phone number, but I was gonna just because I want to show you how like crank wheel works. It's super
Okay.
easy. Um,
So I should share my screen?
Yeah, maybe share your screen, Jonah.
it's gonna be like a text message I sent you.
All right.
And then Jonah,
I did not get your text yet.
the 6716 number.
Boom. Got it.
Perfect. And so yeah, that's crank wheel. It's super easy.
Here, Jonah, full screen because yeah, you can see like everything. That's good-ish.
Hold on.
And so
There we go.
typically what I'll do is I'll do like an increasing death benefit for someone that's younger. If they're older, I'll do something level. And then with the increasing death benefit, I'm doing that because if they ever borrow from their policy, they'll be able to still have that $1 million in coverage because they're borrowing from the loan that the cash value accumulates. And then stuff. And then from there, I'm going right to the tabular detail. I think it's called the same thing on the Beach of Omaha one. But what I'll highlight is, Johnny, you said age 60 is when you would want to retire, right? So, okay, let's look at that.
Yes.
Saying you're 24 right now, your cash value at age 60 would be around $501,000.
You guys see this okay? Like, somebody speak up. For example, because Jonah's monitor's giant.
Y'all could definitely zoom it in just a little bit.
You can zoom in on like Zoom.
Is
Yeah.
that better, guys?
Yeah, whoever just moved it, that's perfect.
But
Okay, I just want to make sure.
All right. Is that good?
yeah, we're good. We're gooch.
All right. So you'll have 501,000 right here in the account value. And so it's the same as the surrender value. So when you're 60, Jonah, you'll be able to borrow from that. So you're gonna have 501,000 that you're gonna be able to take out from. Okay. As you
Okay.
see, your death benefit's gonna keep going up as time goes on. So
Okay.
what's nice is if you're not trying to wait till you're 60, because a lot of people aren't, they want to like start their businesses, like you said, you wanted to, you have some real estate and you're trying to, kind of dive into that. That's where you'll be able to borrow from these policies. And when you borrow from it, it's going to keep compounding it interest as if it's still in there. And so if you look year one, right, from compounding from year 1 to year 2, right, you're obviously not compounding as much as if you compounded from year, 10 to 11. Does that make sense?
Makes sense.
So that's why it's huge. When you do borrow from the policy, it's going to keep compounding as if that money's still in there. So it's still at that high rate. Okay.
Okay.
And then the next thing I'll kind of touch base on here is going to be the premium. So I kind of go into this thing of how I explain my scripts. So I'll be like, all right, Jonas, so usually I recommend it's kind of like the sweet spot for most families to starting out with either like 250 to 350 a month. Okay, that just kind of seems to be the sweet spot for most clients. Now,
Okay.
if you are trying to max fund this policy, I would recommend adding a zero behind your age and that being your premium. Okay. Now, if you are trying to fund more into it, because you do see like the potential in how much more aggressively you can, fund it if you do put more insurance into it, I would recommend maybe just adding that double zero. So since you're 24 or 23, you'd be like 440 a month. Okay.
Okay. Understood.
And then for this policy here, just being a basic increasing death benefit, what I like about IULs is that if they ever are wanting to fund more into the policy, you can always, preach that to them. And so I'm always telling them like, hey, this is something that I do suggest you overfund. I want you to actually accumulate interest and cash value. That's gonna grow substantially over time. And the best way to do that is to overfund your policy. And so usually how I'll do it is I'll walk them through this illustration. So let's say I show you something that's 500 a month, then we'll do 400 a month, and then 300 a month. And I'll just kind of break down the difference between each of those plans.
Nice. So very simple, very straightforward. Just showing them what the illustration is going to do. Letting the illustration sell itself.
And Fidelity is like they have like the best IUL. So the accumulation growth on these are insane.
Yeah.
But I always go
the numbers definitely speak for themselves. Is there anything else that you show the client on the illustration, or is that's pretty straightforward, this part here?
year 10, because people usually ask me like, when can I pull out? And I think year 10, it's not like a crazy long amount of time, but it's also it also has a decent amount of cash value for them to like play with. So it's like, yeah, year 10 you'll be able to borrow from your policy. And like I said, it's going to keep compounding interest as if it's still in there. So you're able to borrow from that, and then it can, it's going to keep growing. So as long as you keep making your premium payments, you know what I mean? And so, yeah, I kind of just preach that to them and letting them know that, because overall the main goal is to borrow from them eventually. You know what I mean?
Perfect. Yeah, this is great. What are some common objections that you get from an IULs?
Sometimes I'll get like, it's honestly just people that they don't have money to put into it. Like they don't have that much money to put into it. And yeah, they're not ready to overfund it, or they want something that's going to give them a ton of return. They don't want to put in for that. You know what I mean? They just want something that's going to get them really rich fast. Well, this isn't that. You know what I mean?
So you're telling me I can't put $100 in every month and become a millionaire?
I don't think so, sir. So
That's not how it works. Okay. What about, let's say, Colby? Can you this sounds really great, but can you send me some more information on it?
yeah, so typically in that situation, what we can do is we'll go through a few other illustrations here, Jonah, just so I can kind of get a good understanding of what you're looking at. Typically, Jonah, I recommend putting in a bare minimum of 150 a month. And that's just being like on the safe side of making sure that you are funding this the correct way. And at the same time, I want to make sure that we're not just getting this for the insurance aspect, even though I do know you want $1 million, your death benefit will be increasing. Okay. And
What
so,
about the objection? Have you gotten told I need to talk to my financial advisor and run this by him?
yeah, the financial advisor one is weird Because it's like I usually hit them with the line like with financial advisor, I'm like they're usually gonna tell you to this isn't something that's like mainly for an investment. I always tell them I'm like if you want to put your money into the S&P and accumulate the most amount of interest possible, you can do that. Like that's an opportunity that you can do, right? But at the same time, with these policies, they're geared to making sure that you have an insurance side too, and you're also locked in on the index part of it. So you're not having to worry about the negative sides of the policy or of like the investment. So, I mean, right now, Joe and I think we can both agree that, you know, these next few years of your investments, we need to make sure those are as secure as possible, right?
Yes, correct.
Okay. And so looking at that with something that's going to be indexed versus something that's variable, which when we both know a variable, something that's in a variable market is it's going to go up and down. If you were telling me you're trying to retire at 60 and you're 50, you lose 40% of your 401k, that 200,000 that you have saved, is that going to put you in a tough spot?
Yeah, that would not be an ideal situation.
Okay. And so with these policies, once you get approved for them, you can always bump them up. You can always add more to the cash value. We can always, increase that. The hardest part is to get approved for the insurance side. Okay. And so what we're gonna do here is I'm gonna start your application. I'm gonna see if we can get you approved, and then we'll get everything mailed out to you. We can go over everything together. If you have any questions, I'm gonna be your guy.
Boom. That's a money line. And also another thing to bring up to clients is, if they say, "Hey, I'm going to put this in the stock market or the S&P 500," they can get a higher return, but they're also going to get taxed on it. So a 6% tax-free return, or 6% tax-free return is the equivalent to a 9% return if you're taxed on it. So you also have to, that's another factor to put into that.
Yeah, because that's another thing. Is like you're getting this because when you pull out from it, you're avoiding taxes, right? It's tax free, and so the reason why it's tax free is because there's insurance tax to it. So sometimes I'll get that objection too. It's like, oh, do I have to get the insurance? I'm like, I don't really need it for the insurance. I'm like, okay, well, the insurance needs to be there. Like, you need the insurance there because if there's no insurance, this is an investment tool, and then you're not going to reap any tax advantages at all. Like, that's the whole point of getting this policy and borrowing from it. You know what I mean?
Correct. Avila's on here. I see him. What's the most common objection you get when selling IULs?
Yeah, it's normally like a budget issue. I mean, let me talk to my wife. You don't hear let me talk to my financial advisor. It's more just so, there's a term that I've heard before. It says illustrations create applications, because the illustrations is pretty much sell themselves. But I mean, the most common one, I'm just trying to think. The most common one is just people having unrealistic expectations of what this can do. Like $50 a month is gonna, make me a multi-millionaire, the next Elon Musk. It's just totally unrealistic.
Yeah, 100%. I love the bro. I love the Jordan Peterson, Andrew Tate mural you got behind you. Who else is
Like
on there? We
that,
got Musk,
we got
and
Peterson,
we got
Andrew
Trump.
Tate, Trump, Elon, and then Tristan Tate.
Fire. Awesome. All right, Kobe. Well, we're going on 40 minutes here, bro. End us on a note. I'll leave it to you. Any other tips, tricks, comments to successfully write IULs?
Honestly, just like follow up with the carriers, like figure out the products they have, do some knowledge on your end to like taking some note on what the carriers have, because we got a lot of carriers at Pinnacle. Like we have
Yeah,
every carrier. And so like take that time, go figure out a little bit more of the carriers that we have, because I just got a ton of new IUL carriers that I'm definitely gonna have to dive into, like North American, Columbus Life. Um, there's a lot, so I'm gonna have to definitely start digging into these and figuring out what is out there. And it's only good for our business because we want to get something that's instantly approved and instant issued, um, and not having to go fully underwritten for everything. You know what I mean? So that's huge.
100%. Yeah. And guys, what Kobe said, take the time. When I started selling IULs, I took my time. I called F&G. I really, walked them through, asked them a lot of questions. They walked me through the illustration, how to do different things. I called NLG, asked them, hey, how do I do this? How do I turn on the guaranteed income rider at such age? How do I make sure I'm max funding it properly without making the policy? All these different things. So, guys, it's the carriers are the ones that they do this on a daily basis, and they built these products. So they have a full customer support team. They're super helpful. So make sure before you start selling these to really call them and have all your ducks in a row. So when you do get a client on the phone, it's you guys know what you're talking about. You're able to come across in a much more confident and much more knowledgeable manner. And lastly, I want to end with, because we have a lot of new agents on the call, and I have agents tell me like, oh, I want to start writing IULs day one. Well, there's evolutions to the game where there's a reason we start with mortgage, because start with mortgage. It's a lot simpler. It's a more emotional sale. And also it's not going to IULs. It takes time to get paid. My largest IUL I ever sold was a $60,000 annual premium. That took 5 months to go through underwriting, close to 6 months to go through underwriting and get issued. And a lot of these, if you're doing F&G and NLG, it could take you 30, 60, 90 days to get this pushed through. So it's not something like, it's not a mortgage policy where you're going to get paid a few days to a week later. These are bigger cases, takes more time, underwritings. There's underwriters look at more aspects to the policy. So, but Kobe, appreciate you hopping on today, brother. Let's make it a solid week, guys.
Oh yeah.
Talk very soon.